Good morning, my name is Karen Jones, Content Editor for the Society of Technical Analysts, and today we're looking at prices for Apple. Now, part of the reason we're looking at prices for Apple is that I want to explain what I do if there are no more upside targets. So, here is a daily chart of the Apple price, and we can see here that we're heading towards a resistance line coming in around 169, 170. That will be the break point on the top side. There's been quite an acceleration up to this point, and this level 170, as I said, is only a resistance line, so it could well break here. Now, above here, we've obviously got the previous peaks. We've got 176.15, which was August 2022, and also a peak nearer to 183 in January 2022. So they would be obvious upside targets should that level break. But what would happen if we actually went above 183? How do we come up with targets then? That becomes a little bit more tricky, but I'm going to show you some techniques that I personally use. So the first I look at are things like Fibonacci extensions. I'm going to just show you what I've done on the weekly chart here, because I do like to look for convergences on the extension prices. So I've gone from this low back in 2018 to a peak in February 20 and taken it from this reaction low. And as you can see, I've got an upside target there of 187.68. What I've also done is an extension from the low in March 2020 to the peak in August 2020 and taken that from a low of about 103, 104. And that also comes in at 188. Now that's quite interesting because that's very close to the previous Fibonacci extension. So I've got a double Fibonacci extension coming in there at 188, and I would treat that as a decent upside target should that 183 area go. I've also got another upside target because I also look at things like point and figure. So if we look at a daily chart for point and figure, we can see here that we have a vertical move up and some consolidation and a vertical break higher. Now, if we look at a very rough target on this, it goes from 125 up to around 155. So that does give us 30 points on the top side. So should 183 go, an upside count from this would be around 185. So you've got two upside targets now should 183 go. The last thing I look at are potential patterns. So if we go back to our weekly chart, let's just take off these Fibonacci extensions. I think you can see that there is a bit of a parallel here. And that's quite a decent depth. So that goes from about, let's say, 130 up to around 175. So that gives us quite a good upside measurement of around 45 points. Now the break point is going to be about 170. So should 183 get taken out, we've got 185, 188. I would also go for 200 being a round figure, but this overall consolidation, if you take the break point as being 170, would give us an ultimate upside target of 215. Now, this is contingent, of course, of the market remaining in an up move, and I would suggest that you monitor things like near-term trend lines. So, for example, this one, that would need to be held in order for these upside targets to be maintained, I would hazard. And the key break point is going to be near-term 170 for these old highs. The old high here at 183 needs to break for any of those further upside targets to come into feature. Thank you.